Hi guys, welcome to Bulls and Bears Markets YouTube channel, and this is our weekly roundup. So this is where we'll be explaining to you what happened in the past week on the forex market and on the Nigerian stock market. We'll also be giving you a sneak peek into what to expect in the coming week. So please come along with me. So we all know that oil price was started last week. Also, coronavirus continued its spread last week. So these two were the highlights of the week. They both affected the Nigerian stock market and the forex market. The Nigerian stock market was the hardest hit by this news. So we saw investors take flight to safety on fears of devaluation returning to the market. In fact, I think dollar rose in naira terms because people were scared of devaluation. So we all know that the Nigerian economy is one dependent on oil. We know oil is our major source of revenue in Nigeria. So whenever there is any negative news on oil, it affects the Nigerian stock market. Remember that in our introductory video, I told you that 60% of the Nigerian stock market is controlled by foreign investors. So whenever they have any bad news on the Nigerian economy, they usually take out their funds from the market. So that is why you and I need to invest in our market, so it will stop being so vulnerable to activities of foreign investors. Like I said before, the week wasn't so good for the Nigerian stock market. We saw the Nigerian stock market record its highest weekly loss in this past week. Its highest weekly loss for the year this past week. We saw the market lose 13.5% on a week-on-week basis. If you ask me, that is not good at all. It was more or less a bloodbath. We had back-to-back daily losses on the exchange. We had days where we had just one gainer on the entire exchange. Some days it was just 3 gainers on the exchange. It wasn't good at all for the Nigerian stock market. It was quite ugly. On the currency side of things, we saw most currency pairs open at a gap. So what happened was that Saudi, in the course of the weekend, before the market even opened, had announced that they're going to increase their oil output from 10 million barrels per day to 12 million barrels per day, and they were also going to sell at a discount price. So by the time markets opened on Sunday evening, we saw most currency pairs open at a gap. Traders kind of reacted to that news. Canadian dollar was most affected by this. We all know that Canada is the most we all know that Canada is one of the highest producers of oil in the world. So the Canadian dollar is highly correlated with oil. Any news on oil affects the Canadian dollar. If you look at your screen right now, you see a weekly chart on USD card, and you can see how high the weekly candle jumped, and it was bullish for most part of the week. So the Canadian dollar was most affected by this oil price crash thing. As if it wasn't bad enough that oil prices crashed, the Bank of Canada on Friday evening, late on Friday, announced that they were doing a rate cut. They cut their interest rates, and that also affected the Canadian dollar. Traders don't like it when central banks cut interest rates. For other currency pairs, it was most currency pairs on the exchange on the forex market trended in this past week. So I'm sure a number of forex traders made money from the market this past week. So we saw the bullish run on Euro USD come to an end. USD regained strength on the back of higher yields. Also, the European Central Bank held their monetary policy meeting in the course of the week, and they didn't cut rates. Their rates are already on 0%. So what they did was they extended their easing program, and they sounded dovish at the press conference. And traders don't like it when central banks sound dovish, so they took it out on the euro. As if that wasn't bad enough, the US announced a travel ban to Europe, so that all of that affected Euro USD. We saw Euro USD lose over 400 pips last week alone. GBP USD also didn't do well. GBP USD took a plunge last week. So it started with the monetary policy body of the Bank of England announcing an unexpected rate cut by 50 basis points following the steps of the Fed. That was the first hit on the British pound, and then towards the end of trading on Friday, news filtered into the market that the US was extending its travel ban to the UK. So that also affected the British pound. So we saw JPUSD fall to a year low on Friday. USD JPY also didn't have it so good. So USD JPY fell to a 3-year low in the course of the week, but it rebounded. It went back up on the back of a stronger USD. Like I said before, US yields rose last week, so that pushed up USD last week. For the Nigerian stock market, the bears established their domination of the market, so we saw some fundamental stocks, very strong stocks, fall to record low prices last week on the back of negative investor sentiments and dividend price adjustment. So stocks like Zenith Bank fell to a record low price on the back of negative investor sentiment, and also they were adjusted for dividends. Dividends adjustment, one of the reasons why Zenith Bank fell so low. So it was pretty much a bearish affair on the Nigerian stock market last week. But on Friday, we saw share prices began to rise, and bargain hunters returned to the market to take advantage of the low prices. We expect that to continue into the coming week. Most strong fundamental stocks are trading at very low prices. We expect bargain hunters to return to the market to take advantage of that in this week. But we don't expect that the prices will rise back to what they used to be, because the sentiment in the market, investor sentiment in the market, is still very, very much negative, and the economic headwinds are not in favor of the market at the moment. So we expect that prices will rise, share prices will rise, but it won't go up as high as it used to be. For the currency market in the coming week, the highlight for the currency market in the coming week will be the FOMC meeting on Wednesday evening. So expectations are that the Fed will cut its rate again by 100 basis points. That means its interest rates will fall from 1.25% to 0.25%. That will definitely affect the USD negatively. Also, we all know that most part of Europe is on lockdown at the moment, so there will be a bit of market volatility will be higher. Most European banks won't be open to trading. Don't be active in the market, so we'll see a bit of we'll see liquidity thin a bit. So you should be careful in taking positions in the market in this coming week. We all know what happens when we have thin liquidity in the market. That notwithstanding, the forex market always has opportunities to make money. Just be careful on how to position yourself so as not to make losses. That basically is the roundup for this week. If you're yet to sign up for our forex training classes, I don't know what you're waiting for. We have both online and offline classes. Please sign up for our classes. Our classes are intense, they're in-depth. If you want to become a successful forex trader, take our forex training classes. Also, if you want to learn more about the Nigerian stock market, our email address is under this video. Please send us an email. If you want to know how to navigate your way around the market, send us an email and we'll help you out with that. Also, we need your feedback. We are big on feedback here. Your feedback is very, very important to us. If you're a forex trader, if you are interested in the Nigerian stock market, if you have interest in the Nigerian stock market, please go onto the comment section and let us know what your thoughts are concerning the coming week. It'll be nice to have your feedback. So thank you for watching. Have a wonderful week. See you in our next video. Bye.